Good evening, everyone. This is me, CA Vandana from Research and Development Division of Taxmann Group of Companies. Hope you all are doing well and your loved ones are healthy and safe. I would like to extend a very warm welcome to all of our participants in Taxmann's webinar on recent amendments in SEBI LODR regulations. So guys, as we all know that over a period of time, there have been lots of amendments in SEBI listing obligation and disclosure requirements regulations. And this webinar has been organized by Taxmann Group of Companies to provide a detailed analysis on recent amendments in listing regulations. So that we can provide guidance to our practitioners, preparers of financial statements, and especially to the companies which are in the process of listing with a recognized stock exchange at the moment. So before moving into the detailed part of our webinar, let me just give you an overview of this Taxmann Publications House. It is a leading publisher in income tax and corporate laws in India. We maintain the largest online database on income tax, corporate laws, international taxation, accounts and audit, GST matters, and various other matters. Our products includes books, journals, magazines, online and offline research platform, and tools for tedious compliances as well. Moving on to next, here we have some of the tips for our participants. So guys, your mic will be on mute and you will not be able to communicate during the entire session. However, you may post all of your questions in the chat box window, which is right there on the right-hand side. All of your questions will be answered by our eminent speaker, either after the session or during the session itself. And once we all are done with the session, then you all will get a copy of this presentation for your future references. So guys, as we all know that SEBI has been empowered to specify the requirements for listing and transfer of securities and other matters there too. And also it has been empowered to issue the directions to any company whose securities are listed or in the process of listing in a recognized stock exchange. And these listing agreements prescribes various disclosure norms that are to be made by the listed companies with the stock exchanges. With time and regulatory changes, the modifications to the provisions of listing agreements are prescribed by SEBI. And SEBI has prescribed separate listing agreements for different segments of the capital market, like equity, including small and medium-sized enterprises, non-convertible debt securities, non-convertible redeemable preference shares, Indian depository receipts, and all these agreements have different requirements depending on the nature of security. With a view to consolidate and streamline the provisions of the existing listing agreements for different segments of the capital market and to align the provisions relating to listed entities with the Companies Act 2013 and to strengthen the corporate governance practices, various disclosure requirements, in order to ease the compliance burden on listing entities, that SEBI has modified the SEBI listing obligations and disclosure requirements, that is basically named LODR regulations, on September 2, 2015, after an extensive and exhaustive consultation. Basically, these LODR regulations are have consolidated and streamlined the provisions of listing agreements that existed for different segments of the capital market. And the provisions of these LODR regulations have been categorized into various chapters, that is chapter 1 to chapter 12. While SEBI has endeavored to keep the LODR regulations and the circulars issued thereunder in line with the ever-evolving market dynamics, many representations continue to be received from the various stakeholders on various aspects of these regulations. And looking onto that, thereafter, a need was felt to review and align the LODR regulations with the following objectives, that is to strengthen the corporate governance practices and disclosure requirements, to ease the compliance burden on the listing entities, and various other amendments inter alia like consistency with the LODR regulations, harmonizing the LODR regulations with the Companies Act 2013, and various other matters. So basically, in today's agenda, we will be discussing the latest and the recent amendments in the SEBI LODR regulations. And to cover up the detailed part of our session, without wasting much of our time, let's welcome our eminent speaker of the day, CA Santosh Maller, sir. He is a practicing chartered accountant having 17 plus years of experience in accounting, auditing, and assurance services. So it's over to you. Please take a lead.
Yeah, thank you, Vandana, and very warm welcome to all the participants, and good afternoon, everyone. So, as Vandana mentioned, this session is about the recently issued amendments to LODR, the listing obligation and disclosure requirements of the SEBI, and more specifically with the focus on the debt instruments. We all know that a company can have two types, of instruments. Well, there can be several instruments, but in terms of the listing agreement, there are two broadly there are two ways in which a company can get covered in LODR. One is if the equity instruments are listed on a stock exchange, and the second is if it's debt or non-convertible debt instruments are listed. And different regulations, as we know, different regulations within LODR are applicable in either case. So if it's equity listed company, then it's Reg 33. Rather, if it's a debt listed company, then it's a Reg 52 that becomes applicable. Till date, we know that while the disclosures and the financial result reporting requirement are more extensive for equity listed companies as compared to debt listed, the focus of these amendments, the SEBI circular dated 7th September 2021, was with respect to debt listed companies, who basically the regulator has tried to harmonize the requirements between equity listed companies and debt listed companies. So, in terms of the structure of the session, I have broken up the session into broadly 3-4 parts. First, we will have a look at what are the key requirements which have been introduced for debt listed companies. There is no change with regards to equity listed companies. The only change is with regards to debt listed companies, and some of the new requirements have been introduced for debt listed companies, and some of the existing requirements have been further expanded in case of debt listed companies. So this session I have broken up, as I said, into broadly 4 parts. We will have a look at broadly the framework of the circular, the hierarchy for debt listed companies that has been introduced, the concept of high value debt listed companies. The second part will be basically the requirements with regards to debt listed companies or high value debt listed companies. There are certain enhanced corporate governance requirements that have been introduced. We will have a briefly look at that. And also, day before yesterday, 5th of October, we had a further circular from SEBI, which mentioned, which provided certain clarifications and certain relaxations with regards to the format in which the financial results should be provided for by the debt listed companies. So we will also have a look at that. So with that, let's begin with the first session. So LODR 5th Amendment Regulations 2021, it's effective from September 7th, 2021. So the first question is whether these changes are applicable from the second quarter or is it from the next quarter. And in my view, the answer to that is pretty clear, that LODR, the changes are effective on the date of notification, that is 7th of September 2021, and therefore this should be applicable for September quarter also, that is Q2 also. So it will be difficult for a company to take a position that it's applicable from from this third quarter. All companies which are NCD listed, that is non-convertible debentures listed, having outstanding value of listed NCDs of rupees 500 crore or more as of 31st March 2021, will have to comply with the corporate governance provisions of LODR. So we all know that LODR requires several corporate governance requirements, like for example, for related party transactions or for whistleblower policy, or with regards to independent directors or audit committees. So those will now be applicable to high value debt listed companies also. What is high value? It has been, the threshold that has been decided by SEBI is 500 crores or more. The outstanding value of NCDs should be 500 crores or more. Okay, so for companies having NCDs or debt instruments which are listed of less than 500 crore, these enhanced corporate governance requirements are not applicable in those cases. The entities will be referred to as high value debt listed entities. All listed entities with non-convertible securities shall now submit financial results on a quarterly basis. So while there is a distinction with regards to corporate governance, amongst debt listed companies, as high value or other than high value, for the quarterly financial reporting requirements, there is no distinction, and all entities who are debt listed having non-convertible securities are required now to furnish their financial results on a quarterly basis. Plus, there are certain enhanced intimation and disclosure requirements for entities with listed non-convertible securities. So these are the basic broadly the changes that have been introduced. So in terms of hierarchy, friends, the circular categorizes debt listed entities into three parts. The ones with outstanding value of listed NCDs of less than 500 crores, they will have to basically have the corporate governance provisions, that is regulation 15 to 27. They will not be applicable to such small entities. I mean, instrument where the value of the listed debt instruments is less than 500 crores. So this corporate governance requirements under regulation 15 to 27 shall not be applicable. However, Chapter 5 of the LODR shall apply. High value debt listed entities, that is those companies with value of listed entities of more than 500 crores. In that case, it shall comply with corporate governance provisions, that is regulation 15 to 27. And those entities which have both equity as well as debt listed shall comply with both Chapter 4 as well as Chapter 5 of LODR. So basically, friends, you would remember that under Companies Act, Section 2, subsection 52, there was an amendment sometime in March, which basically removed the debt listed entities from the definition of listed companies. And therefore, with an overall objective of ease of doing things, under Companies Act, listed companies are only the companies which have only the equity instruments listed, and those which have their debt instruments listed are not considered to be listed post that amendment. The SEBI LODR did not, have that change, and it considers listed entities to also include debt listed entities also. And as a matter of fact, with these changes, with these amendments in September, on 7 September 2021, it looks like the SEBI has taken a different view when it comes to debt listed companies, and effectively it has annulled the the relaxation that the MCA had given while those amendments to the definition of listed entities, listed companies. And therefore, it seems to be a bit of a hodgepodge in terms of the regulatory direction in which the regulatory changes are going on. There are also amendments in Chapter 4 with regards to corporate governance requirements for debt listed entities. Now, these are applicable only to high value debt listed entities, that is, debt listed entities whose value is more than outstanding value is more than 500 crore as of 31st of March 2021. Listed entities that have listed their non-convertible securities and have outstanding value of listed NCS to be 500 crores or more, the threshold has to be determined on 31st of March 2021. And then regulations 16 to 27 are only applicable in such cases. So as far as the high value debt listed entities are concerned, they need to comply with or explain basis till 31st March 2023. So these corporate governance are to be complied with. The window for that the circular gives us till 31st March 2023, and it's mandatory from 1st April 2023 onwards. So from 1st April 2023 onwards, the regulations 16 to 27 of LODR are applicable to high value debt listed entities. For listed entities that become high value debt listed entities subsequently, so there can be a scenario where a company freshly issues the debt listed instruments, and therefore it becomes HVDLE subsequent to 1st of April 2021. So in such cases, such a company shall comply with regulations 16 to 27, that is with regards to corporate governance, within 6 months from the date when the listed entity becomes high value debt listed entity. However, shall be on comply or explain basis till 31st March 2023. So there is again a window which has been given to such entities till 31st March 2023. So about 1.5 years window has been given. We all know that corporate governance requirements can have, it can take substantial time to comply with, because companies may need to form various committees, various procedures need to be set in place. There may be a need to appoint independent directors, etc. So those requirements would need, companies would need time to comply with that. So therefore, the window that has been given is of 6 months from the date of issue in normal case, but as a transition requirement, it has been extended to 31st March 2023. So about 1.5 years has been given to all the existing companies or the companies which have been newly becoming high value debt listed entities. Chapter 5, enhanced disclosures. Enhanced disclosures are applicable to listed companies that have issued non-convertible securities, including HVDLEs. So all debt listed companies need to comply with Chapter 5, the enhanced disclosure part of Chapter 5. It is applicable immediately, that is from 7th of September 2021. So Chapter 4 is already applicable to all listed entities that have issued their equity shares or convertible securities. However, with this amendment now, the high value debt listed entities who have their NCS listed will have to comply with Chapter 4 up to the extent of applicability. Chapter 5 is already applicable to listed entities that have issued their NCS, and amendment now aims to have enhanced disclosure requirements. So the big change in Chapter 5 is with respect to enhanced disclosure requirements, and these are basically applicable to all debt listed companies, irrespective of whether or not they are high value debt listed entities. In terms of the process of change in the board composition, the high value debt listed entities will have to comply with Regulation 17, resulting in transformation of board composition, which includes the following. There shall be at least one woman director, and not less than 50% of the board shall comprise of non-executive directors. We know that women's director is compulsory under Companies Act for certain class of companies. For under LODR, it was compulsory only for equity listed companies. Now the requirement is that for high value debt listed entities, they will also have to have at least one woman director on their board, and also they should ensure that not less than 50% of the board shall comprise of non-executive directors. Where the chairman of the board is a non-executive director, at least 1/3 of the board shall comprise of independent directors. And where the listed entity does not have a regular NED as a chairman, as a chairperson, at least 1/2 of the board shall comprise of independent directors. Independent women director will be required to be appointed. So one of the immediate requirement will be that high value debt listed entities shall look out for independent women director. We all know that there is a shortage of women directors in India. So this is something which the companies will have to take up in the immediate action required list. The number of directors shall not be less than 6. So total number of directors shall be at least 6. In terms of the committees, the high value debt listed entities will ensure compliance with all mandatory committees. For a listed entity, have to constitute audit committee, nomination and remuneration committee, and shareholders relations committee, stakeholders relation committee. Certain committees are not mandatory, and such listed entity has to mandatorily constitute a risk management committee. In terms of the corporate governance requirements with respect to subsidiaries of listed entities, listed entity will have to list down its material subsidiary as per the definition or under Regulation 16(1)(c). So therefore, this is a requirement that all the subsidiaries which are material, and we know that materiality has been defined in LODR to be 20%, constituting at least 20% of the revenue, profits, or the asset size of the entire group. An independent director on the board of the listed company to be on the board of such material subsidiary. So as is the case with equity listed companies, for high value debt listed companies also, you'll have to have one independent director to be also nominated on the board of material subsidiary. The role of the audit committee enhanced to include the review of investments made by unlisted subsidiary, whether material or not. So the extended requirement of audit committee of the parent is also applicable in case of unlisted subsidiary of the parent of within the group. In terms of the insurance requirements with regards to insurance and secretarial audit, the board has to undertake directors and officers insurance for all independent directors on the board. So most of these requirements may not have, most of these things may not have been in place as of now. So till 31st of March 2023, the companies high value debt listed companies will need to ensure that these things are in place before 31st March 2023. With regards to secretarial audit, under Regulation 24, such listed entity and its material unlisted subsidiaries incorporated in India shall undertake secretarial audit report. The secretarial audit report shall be annexed to the annual report. The report shall be filed with stock exchanges within 60 days from end of each financial year. The secretarial audit report shall now include comments on compliance with Regulation 17 to Regulation 27. With regards to related party disclosures, on a half-yearly basis, there are disclosures required for related parties along with standalone results. So this requirement was till now applicable only for equity listed companies. Now it is applicable even for high-value debt listed companies. Independent directors will have to be placed. So the concept of independent directors in case of private entity admitted a closed corporation seems counterintuitive. Entity may be on a body corporate that is not a company. So, for example, there can be a case of an InvIT or a REIT, or even a trust which gets listed. So it is applicable in those cases also, and may be required to appoint directors under the applicable statute. So the REIT regulations or the InvIT regulations would in turn require certain directors to be appointed, so that those requirements will have to be also considered by the company. Non-executive directors in such cases will be deemed to be independent directors. In case of trust, non-employee trustees shall be deemed to be independent directors. With regards to policies, the companies will have to frame newly the related party policy, whistleblower mechanism, risk management policy, also policy on material subsidiary. These policies will have to be framed, approved by the board, and also hosted on the website of the company. With regards to the disclosures which are required on the website of the companies, like for example, the composition of various committees of the board of directors, the terms and conditions of appointment of independent directors, code of conduct of board of directors and senior management personnel, details of establishment of vigil mechanism and or whistleblower policy, the criteria for making payments to non-executive directors unless disclosed in the annual report, the policy on dealing with related party transactions, policy for determining material subsidiaries, and details of familiarizing programs imparted to independent directors. So all these disclosures will have to be hosted on the website of the company, and it should be available for the purpose of shareholders' information. In terms of the agenda papers for the board will have to look into the appointment of directors to comply with the board composition. So, for example, the women director or the composition in terms of minimum non-executive director requirement will have to be taken up by the board. Deciding on the composition of the committees, succession plan, that is also required now for high-value debt-listed companies. Code of conduct for all board and senior management personnel. Withdrawal of any stock options. So because the non-executive directors are not permitted to have any ESOPs, if there is a ESOP which is outstanding, which is the non-executive directors are entitled to, that will have to be withdrawn by the company. Risk assessment and mitigation, framing, implementing and monitoring the risk management plan, evaluation of independent directors and familiarization programs for independent directors. In terms of the quarterly noting at board meeting, agendas like review of related party transactions, complaints under vigil mechanism, minutes of board meetings of unlisted subsidiaries, a review of all significant transactions, arrangements entered into by the unlisted subsidiaries, secretarial audit report under Regulation 24, minimum information as specified in Part A of Schedule 2. This slide lists down the matters which are required for shareholders' approval, continuing with the appointment of non-executive directors who have attained the age of 75 years, subsequent approval for payment of fees, compensation paid to non-executive directors, including independent directors, every year in which the annual remuneration payable to a single non-executive director exceeds 50% of the total remuneration payable to all NEDs. Annual remuneration payable to ED who is a promoter or a member of promoter group exceeds 5 crores or 2.5% of the net profits, whichever is higher. And if there is more than one such executive director, the annual remuneration to all should not exceed 5% of the net profits. If it exceeds, then the shareholders' approval is required. So these compliances will also have to be now ensured by high value debt listed entities. The second section, so we have looked at certain new corporate governance practices which are now applicable to high value debt listed companies. Now we will talk about the enhanced disclosure requirements which are applicable to all debt listed entities. So these requirements are not just restricted to high value debt listed entities, but it's applicable to all debt listed entities, irrespective of whether or not they are high value. So all debt listed companies need to ensure prior intimation of at least 2 working days before the board meeting shall be given for following matters, that is alteration in the nature of non-convertible securities or rights of holders, alteration in the date of interest, dividend, redemption or payment of NCS, financial results, that is quarterly or annual, fundraising by way of new NCS or non-convertible securities, or any matter affecting the rights or interests of non-convertible securities holder. Prior intimation shall be given before the date of dispatch of notices for AGM, EGM, or for approval of financial results or for fundraising through NCS. Meeting of NCS holders for matters affecting their rights or interests. The expression promptly informed shall now mean within 24 hours from the date of event occurrence of the event. So all the event-based material transactions will have to be intimated to the stock exchange within 24 hours. If not made within 24 hours, the listed entity shall also explain for the delay. New disclosures have been added in Schedule 3 Part B that are in line with disclosures requirements for equity listed entities. Disclosures made to stock exchanges shall also be hosted on website of entity for a minimum of 5 years and thereafter as per the archival policy. Other disclosures, there are new disclosures inserted in Schedule 3 Part B for entities with listed non-convertible securities, which are as follows: disclosures of the outcome of the board meeting to stock exchange. So as in case of, as we all know, for equity listed companies, the outcome of board meeting has to be informed to the stock exchange within 30 minutes of the closure of the meeting. So the requirement now extends to debt listed companies also, and all debt listed companies, not just the high value debt listed companies. So decision with regards to fundraising proposed to be undertaken by way of NCS or financial results. So these two are required to be informed to the stock exchange within 30 minutes of closure of the board meeting. fraud, defaults by listed entities or its promoters, KMPs, directors, employees, or arrest of KMPs or promoter. Other disclosures: change in directors or KMP or auditors, detailed reason for resignation of auditor, details as specified with regards to resolution plan or restructuring of loans from banks or financial institutions, one-time settlement with a bank or a winding up petition, proceedings of general meetings of listed entities, disclosure of events as specified in relation to CIRP, or that is under IBC of a listed corporate debtor. When it comes to financial results, entities with listed NCS shall now submit audited or unaudited quarterly financial results to stock exchanges with limited review report or audit report within 45 days from the end of the quarter. So, as is the case with equity listed entities, debt listed entities will also have to file their financial results on a quarterly basis within 45 days from the end of the quarter. Earlier, of course, it was half yearly. For debt listed entities, it was only half yearly results were required. Now it has been made more stricter on a quarterly basis, and simultaneously submit it to debenture trust in case of debt listed entities. Consequently, the requirement of trading window closure shall be applicable on quarterly basis instead of half yearly basis. The annual audited financial results shall be submitted to stock exchange within 60 days from the end of financial year. The timeline for filing has been aligned with Regulation 33. So Reg 33 has been, to that extent, it has been harmonized with Reg 52 so far as the financial results are concerned. Along with the half-yearly results, a statement of assets and liabilities and statement of cash flow is also required on a half-yearly basis. Disclosure of financial ratios. Now, financial ratios have to be now included as a part of results. So that has been extended to debt listed companies also. Submission of a debenture trust certificate to stock exchanges within 7 days confirming submission of above content has been done away with. Submission of, on a quarterly basis, a statement indicating utilization of issue proceeds of NCS till the issue proceeds are fully utilized. This is a new thing. So, as is the case in case of Regulation 33 with regards to equity listed companies, if there is any new issue of capital, the utilization of issue proceeds needs to be disclosed. So this has been inserted in Regulation 52 also. Material deviation and use of proceeds, if any. As I said in the introduction, just day before yesterday, there was a circular which clarified certain aspects. Many companies had represented to SEBI that this is a new requirement, and it came just on 7th of September. And then all of a sudden, you cannot just ask us to file quarterly results, because we, in the earlier period, we did not have any practice of preparing quarterly financial results. So first time complying with these requirements would be quite onerous. So SEBI actually paid heed to those representations and came up with this circular on 5th October 2021. It gave certain relaxations. So it has prescribed the format of financial results on a quarterly basis, where basically you will have to give 6 columns. You will have the 3-month ended for the current quarter, the preceding 3 months ended. So that is, for example, if it's September quarter that we are talking about, September 2021, the preceding 3 months will be June 2021. The corresponding 3 months ended previous year. So you will also have the September 2020 quarterly results. You will also have the YTD of the current period ended 30th September. So you will have 6-month P&L for September 2021 and 6-month for September 2020, and finally you will have 31st March 2021, the last annual results. So this is the format which has been prescribed. The relaxation which is now they have given is now in that footnote, which says that in case of listed entity that does not have corresponding quarterly financial results for the 4 quarters ended September 2020, December 2020, March 2021 and June 2021, the column on the corresponding figure for such quarters will not be applicable. So basically the SEBI is saying that because as a debt listed company, you may not have been preparing quarterly financial statements in the past. So the comparative information for September 2020, December 2020, March 2021 or June 2021 need not be furnished. And therefore you will also only have in that case 30th September current quarter results. And you will also have the September 2020, the half-yearly results, and March 2021 full-year results. So you will only have 3 columns in that case. The tricky thing here is that because basically you will have to have the current quarter's numbers properly. Now, typically what happens is you prepare a YTD results, you subtract from that the last quarter's financial results, and you derive the current quarter's numbers. Now, since this is the first time that a debt listed company will prepare this on a quarterly basis, you may not have June 21 quarterly results, and therefore to get to September quarter results, one will have to do a proper closure and cutoff procedures for June as well as for September 2021. So while June 2021 need not be presented, but you may have to still prepare that, because other than that, because otherwise you will not have a comfort on September 21 quarterly financial results. Likewise, in case of balance sheet, the format has been prescribed. So they have said that as at so 2 columns basically, as at the September 2021, that is the current half year year end or half year or year end, and the previous half year end, that is September 2020. In this case also you have the exemption where it says that for half year 2021 you don't need to furnish the financial the balance sheet figures, the statement of assets and liability figures, if you don't have that, because again September closure you may not have done as a debt listed entity. So with that, the purpose of this short session was to discuss some of the new requirements, because these are newly issued, and there is a lot of confusion in market with regards to what is the requirement. So we have about 10-15 minutes for question and answers. I'll hand it back to the moderator to take any questions from the participants. Over to you, Vandana.
Yes, sir. We do have one question from one of our participants. So, are you there?
Yeah.
So we have one question from one of our participants, Preeti Sharma, and I guess she wants some more explanatory information, like please explain again for the quarterly financials submitted for September 2021.
Yeah, so basically, Preeti ji, the requirement in terms of the financial results is that for September 2021, you will have 6 columns ideally. Now, because as a debt listed company, you're doing quarterly financial, result for the first time. SEBI, day before yesterday, they came up with a circular exempting the requirement for comparative financial statement. So ideally, in normal case, you would have given September 2020 and June 2021 as the preceding 3 months and corresponding, financial results for earlier period. Now, because it is, it may not be readily available, and within 45 days, if you have to furnish the results, it may be troublesome for companies to furnish that, to pull out that information. Therefore, they have relaxed the requirement for comparative financial information. So you will have to give results for September 21 only, okay, as a quarter. And then, of course, for the half yearly, you will have to give again September 2021. Again, for half yearly results, September 2020 has been made optional, and you don't need to give that also. So effectively, for the current quarter, you only need to have September 2021 quarter, September 2021 half yearly, and 31st March 2021 full year. So the 3 columns you will have to have. I hope that answers your question. I hope that's clear, Preetiji. If it is not, then please feel free to type another question in the chat box. Okay, I can now actually, Vandana, see the chat box. I also have one
we
question.
have
from
one
Mr.
more question from
Hemant Hanmat. So here the question is whether even a small fraud by an employee, not a KMP or director, will have to be disclosed. As per the circular, the language suggests at present. So Hemantji, yes, when it comes to fraud, I think while the Institute's guidance note under section 143 subsection 12 of Companies Act says it lays down a threshold of 1 crore, under LODR there seems to be no such threshold, and technically you're right. I think they have not limited the threshold to any numerical figure, and based on the strict reading, it looks like it is applicable to even small frauds. Having said that, the stock exchange filing, whenever there is a material event, the concept of materiality, one can go by the normal threshold of 20%. But again, when it comes to fraud, it's difficult to have a concept of materiality in that, and therefore, yes, a very strict view can be that even a small fraud will have to be reported to stock exchange. But then, of course, the question is also on what is fraud, okay, and whether fraud is established. So if it is a fraud which is it's a defined term in law, and therefore if a court of law, if it establishes a scenario to be a fraudulent scenario, perhaps only then that requirement will be triggered. But I agree with you, there is no threshold as such which has been laid down in LODR. Thank you, Preetiji. I think you have any other questions, participants? We still have about 5 minutes for the session. Please feel free to type in the chat box. So essentially, my point here is that, thank you, Hemanji. So essentially, the point here is that, again, I'm repeating that under Companies Act, the definition of listed companies was tweaked, was changed in sometime in February or March, and they removed the debt listed companies from the definition of listed companies. LODR did not replicate that, that relaxation or exemption in the SEBI regulations, and it seems that they have actually made it more stricter by requiring, the quarterly financial results or all these corporate governance requirements to be, extended also to debt listed companies or high value debt listed companies, it seems that SEBI is wanting to make the requirement more stricter for the companies, while the Ministry of Corporate Affairs perhaps is wanting to relax the requirements. So there's a bit of a dichotomy there. Question from Mr. Jayaprakash Reddy, whether June 2020 financials will be required. June 2020 for this September quarter, sir, will not be required because it's not the preceding 3 months, nor it is the corresponding 3 months for last September. So June 2020 is not required. Okay, so Siddhi Pedekar, then what will be the compliances to be made? Sir, if a company is a government company, 100% holding by President of India, then what? Siddhi, I don't think I'm clear about the question. So you're talking about a government company which is held by 100% held by the President of India. And does it have a debt listed instrument or non-convertible security, which is, a debt listed security? Is that the scenario, or I'm not clear on the question, please. If you can just elaborate on the question, it will be helpful. Yeah, so if it's a debt listed entity which is government owned, in that case, yes. And if it's a high value debt listed entity, then all the corporate governance requirement will be required, and it will also have to furnish financial results on a quarterly basis. So therefore, in that case, you will have to comply with the quarterly financial reporting requirement under the regulation 52. And also you will have to comply with the corporate governance requirement under regulation 16 to 27 of the LODR. So if it's a high value debt listed company, in that case, even if it's entirely fully owned by government company, there is no relaxation as such from a SEBI point of view. Mr. Reddy has asked whether September 2020 quarter and half year. So Mr. Reddy, yes, in normal case, September 2020 quarter and half yearly results are required, but because of this circular dated 5th of October, which you will have on your screen, it is not compulsory. If you want to give, you can give, but it's not compulsory to to furnish that, because it's a transitional exemption that SEBI has given via this circular dated 5th of October. Any other questions, Vandana, that you have?
No, sir. There are no such questions which we can see on our screen.
All right.
Yeah, we have one question.
Okay, Preeti ji has asked, we did not file for trading window closure ever. Do we have to do now? Yes, Preeti ji, if you are a debt listed company, you will have to do that, because you will have to do a quarterly financial reporting. So trading window closure will have to be there. But in case of debt listed company, trading window closure is much easier, because it may not be, the volume of activity may be very less as compared to equity traded, listed equity instruments.
So I once again request all the participants, in case you have any queries, kindly raise the same. No such questions. So I guess with this we can conclude our session. So a big thanks to all of our participants for making this session quite interactive, and it's a hope that all of your questions have been answered by our eminent speaker. In case if any of your question has been left without any answer, so you can directly email to us on our ID, or you can type this at the moment. We will make you directly coordinate with our speaker. And thank you very much, sir, for providing your valuable insights on the recent topic and providing a guidance to our participants. I hope the session has been fruitful and worthwhile to all of our participants. And in case of any further queries, kindly email to us. Thank you very much, guys.
Thank you. Thank you all.